Hello, everybody. Good evening, and thanks for watching. I'm Pat LaChapelle. It is late at night. It is 12:40 in the morning here, but I've got to update my paper trading. I worked late, and I just finished working, so um, I was gonna go live earlier, but I just didn't have time. So, yeah, basically I'm paper trading. So where am I at in the model? The goal for the model. Let me pull up the model and talk about where I'm at, and then I'll get into what I'm doing with paper trading. The model review is going to be pretty brief. I mean, like I said, it's almost 1 a.m., so I got to get to bed at some reasonable time so that I can wake up for work tomorrow. But here we go. Here's the PowerPoint. These are yesterday's picks. So let's go all the way up and let's talk about the goals for this project. So what even is this project? I have two goals. My first goal is to automate a method. So this is an automated strategy. I want to run a script every day, and it should go make buys and sells in the stock market, and I could walk around and have a nice day while I'm getting 20, 30% returns automatically. I don't have to think about it. I want to check in every once in a while for the model performance, maybe weekly. Other than that, just let it run and get rich. That's my goal. So how am I going to do that? I want to beat the S&P 500 by a significant margin. We'll stay in market neutral. So the S&P goes up on average 6% per year. I want to do 3 to 4 times better than that and get 18 to 24% per year. But I want to stay market neutral. So I shouldn't have to worry about bear markets and bull markets. Regardless of what the market's doing, I should get a good return. The return should be consistent regardless of the market. So I'm going to accomplish this with a long-short strategy. I'm making predictions relative to the market and going long on the best predictions and going short on the worst predictions. So if the market goes up, the longs do better than the shorts. If the market goes down, the shorts do better than the longs. But at the end of the day, it's balanced so that it makes money. So the layout for this is at the bottom. So I'm starting with the universe of stocks. I have data going back to 2011. It's a really good data set. The link's in the description if you're interested. But basically, it's a really good data set. It doesn't have survivorship bias, so stocks that have been dropped out of the S&P are not included in the data. It's daily data, open, high, low, close volume. And so but you don't want to use all the data. So if you put everything into the model's not going to perform well. The main reason being that different things move differently. So ETFs are going to move differently from stocks like Apple or Tesla. Different things, move differently. So the stock universe that I'm using, I've isolated ADRs, which are foreign companies listed on the U.S. market, common stocks, which are things like Apple or Tesla, and then real estate investment trusts, which have similar price dynamics. And then I'm filtering, by top volume because I want the strategy to be scalable. I'm trimming out everything that's less than $5 a share because I don't want penny stocks. And there's one more filter, but I'm having trouble remembering it. But so I have a universe. The next step is to train a model. So the model should be predicting something to do with the returns. I have a couple of models. One's predicting returns relative to the market over the next 5 days, and one's predicting the Sharpe ratio relative to the market over the next 5 days. But the former is the one that I'm implementing in my paper trading strategies that I have going on right now. So the final step, once you have a good model, is to implement a portfolio strategy. So take the output of the model and decide how to allocate capital accordingly. Now, all this code I'm writing in Python, so I have a secondary goal for this project up here at the top right, which is to create a usable tool that anyone can use to create these sorts of models for themselves. So I've got the code to now where I'm creating the universe, defining the model, training the model, testing the model robustly, creating a portfolio strategy, a fairly complex portfolio strategy using hierarchical risk parity, volatility scaling, drawdown scaling, information coefficient scaling, and spread scaling. And then I'm also, it can either go dollar neutral, so equal positions on long and shorts, in terms of money, and it can also go beta neutral. So make it so that it's beta is 0. and it's not correlated to the S&P 500. So, hey, Hike, how are you doing? Now, oh yeah, all of this stuff I'm doing in under 100 lines of code. So if you're interested in that, go check out the GitHub repository. The link's in the description. Fork it, download it, let me know how it works, let me know how I can improve it. Of course, if you find it useful, please star the repository, follow me on GitHub. That stuff helps me out. So the model, I'll skip the model for now because I'm kind of short on time. I want to get to bed. But I'm going to talk about the portfolio strategy. I'll talk about the model a little bit. So at left is the model for the Sharpe ratio. Now I'm not going to... fuck it, I'll show the decile analysis. Here's the decile analyses for the Sharpe ratio. I'm using the model at the top, and these all look really good. So they're all monotonically... light gradient boosting method. And so these decile analyses, without getting too into it, look really good. They're roughly monotonic every year. This is a walk forward analysis. However, when I look at the deciles in terms of return for the Sharpe ratio model, you see it does pretty poorly. So it's inverted, and it would have been losing money if you just did a simple long-short spread. It would have lost money in this early regime, 2016 through 2019, and then it would have lost money 2020 through 2021, but it would have made money in the most recent regime, 2022 through 2025. Now, this kind of made sense because when I was implementing a portfolio strategy on this model, it was hard to do well in the early regimes. It was easy to do well in the later regimes. So that kind of explains that. But this is predicting the Sharpe ratio. So, of course, volatility is incorporated into it. So I went through and looked at it again and said, okay, what if I train a new model, the same exact model, but instead of predicting the Sharpe ratio over the next 5 days, I'm going to predict the returns over the next 5 days. And you see the distributions here still don't look very good in the first two regimes, but it wasn't catastrophic, and the model actually was able to return money over those regimes. In the recent regime, the decile analysis looks really good, and it's a nice steady uptrend. So that's where I was at with that. So I created some models, and I decided to start paper trading. Oh, I made an improvement to the volatility estimate thanks to the suggestion of Sir Night Night. And with this improved volatility, I'm now using Yang Chang volatility to scale instead of the simple volatility. This is the first model I'm running. Oh, so this is, wait, unscaled, I don't know what that is. I have too many slides. Maybe it's on a different slide. Let me pull up the other PowerPoint really quick. Hike, I'll reply to your comment in a second, but these live streams get turned into videos, and the videos do really well if the beginning of the video is captivating. So I don't want to reply to any comments in the intro, or too many. I want to make this as interesting as possible. That's why I'm trying to talk fast, too. I'm trying to keep my brain at 100%. So let me pull up the other PowerPoint. Oh my gosh, there's so many. Show all windows. Not that guy, not that guy. Oh, there we go. So yeah, this is the PowerPoint where I was looking at the paper trading models. And nope, wrong PowerPoint. I have too many PowerPoints. Show all. What's that? Nope. Show all. What? Do I not have it pulled up? Show all. Oh, here we go. Okay, sorry that took so long. So, no, it's not that one either. Where did that slide go? Yeah, I don't know where that slide is, so I'm not going to get into it. But basically, I've implemented 3 strategies. They all have the same base model that they're working off of. So, um, and the only thing that's changing, this is the model, this model right here. This one at the right. So it's this model, and then oh, sorry, the one on the left, actually. It's this model, and all I'm doing is changing the volatility scaling. So this leftmost strategy is unscaled. There's no scaling. Oh, and it's 4 positions short and long, because that's what I found worked best. So this is unscaled with 4 positions on each side. This has a target volatility of 25%. So in the Yang Chang volatility estimator, it goes above 25%. It's lowering the exposure of the portfolio according to a sigmoid curve. So if it's slightly above 25%, it's just slightly lower in exposure. If it's way above 25%, it's going close to 0.2, 20% exposure. And then this one has a target volatility of 10. So basically this leftmost one is risky, but gives the best returns. The middle one is less risky, still gives pretty good returns. Worst drawdown is 25%. And this rightmost one is the most conservative, but it only gives about 10% annual returns. That's still better than the S&P 500, so I'd be happy with that as a first iteration. So what I'm going to be doing today is going through and updating the paper trading, updating the results from yesterday in the market, and then running these again to get the new models. So let's go ahead and do that. All right, so let's just copy this slide and put it in. Get rid of that guy. Okay, let's see. So today is the 29th. Okay, what's Hike say? As per configured my structure, market context, model Hurst, ATR, and etc., and a candidate selection all. Today I have retested all previous data and started new today, and systems on profit. So you made money today? What was your percent return? I'm actually speculating in my Roth with some of these outputs. But I'm not picking all of them because it's a Roth, so you can't short anything. But I pick the ones that look best, and then I buy a put. And that's doing well, even though the model's not doing well. So let me show real quick. This is where I was at after the end of the day. I guess it would be 2 days ago now. So here's the returns curve. We're 2 days into the strategy, so the returns curve doesn't look good, but I'm not too worried about it. Now, why is that taking so long to run? I don't know. All right, so to get the predictions, first we need to get the predictions for today. Why is this taking? There we go. I have no idea why it took so long to run. But you see these risky model is about 0.7% negative return. Balanced model is about 55% negative return. And this guy's slightly positive. What's it at? Oh, it's basically 0. I mean, that's... but at least it's not negative. So, and that at least, you know, it looks bad on these riskier strategies, but I haven't actually closed any positions yet. Yeah, so 0.0036%, but this is roughly what you would expect. If it's not doing well, you would, you know, risky should be lowest, balance should be middle, conservative should be top. So let me... Okay, I'm going to pull the data first, actually. All right, now let's pull the data from yesterday. Okay, put this guy here. Let's get rid of that. And then we'll put this guy here. Actually, we could put this guy here. And let's put this guy here so we can look up the tickers. I don't want to flip between screens. And then let's get yesterday's predictions. So lots of the same stocks still. Okay, so on the unscaled strategy, let's put in yesterday's date, 5/28/2026. So I'm doing two things right now. I'm updating the results from yesterday and then getting the new predictions for today. So we have 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, 6, 7, 8. And then the sell date will be June 4th. Oh, I forgot. This guy we have to say equals that. And then fill those guys down. Is that right? 6, 2, 6, 3, 6, 4. All right, let's highlight these guys dark gray, or light gray, I mean, to stay consistent. So 1, 2, 3, 4, 1, 2, 3, 4, yeah. Okay, so what are the stocks we have? We have HTCO, we have Bird, we have Lunar, we have ASST, so that's a new one. We have SanDisk, we have Skills, we have HCAI, and we have ACAN. And same thing, bunch of longs and some shorts for each. Predicted return. So let's fill these out. 0.285228, 0.086761, 0.382397, 0.117511, 0. So this guy's minus 0.85455 minus 0.564887 minus 1.171634 1817, and this guy's minus 1.505643. Okay, now I need to, let's make this guy, wrap it, make it bold. And how do we freeze it? View freeze panes, top row. What should I make these? Something different. Maybe orange. That's good. And then this guy, let's fix that highlight so it looks better. Hey, Young Nov or Young Nov? I'm from California, the former home of notorious cop killer Christopher Dorna. Yeah, I'm from California. That's where I live right now. Okay, so buy open price, buy price. Okay, so let's get these prices. Now let's see, did we get the data? Yeah, we got it. So Dolt SQL Server. Let's go here. Let's keep that the same. Let's get out of here. And let's go to scripts. Oh no, not scripts. Let's go to data retrieval. And let's run setup data.py. Okay, then we need to check after to make sure that's correct. That guy I don't need anymore. So let's go to trading view. HTCO. Make it 1 day. 9:30. 9:31. Open 3.37. And then we're going long on this, so let's get the worst price in the first 30 minutes. Would have been the high here, 3.57. All right, so now let's go to bird. So the open 1 day. $9.37. Open 3.86. Why you ain't got no followers, bro? You're doing a good job. Hey, yeah, that's what I say. We're on the same page. That's what I'm always thinking. How come I don't have any followers? But actually, the rate of new subscribers I'm gaining has been improving substantially recently. So I'm happy about it. But I agree. Why don't I have more subscribers? Yeah, I don't know. I my goal is just keep hitting my head into the wall every day, and at some point, I think once I have some really good models working, then people will be more interested. So the worst place to buy in the first half hour, 3.86. Oh, it's when it was highest. So, but that was at 10 a.m. So before 10 a.m., we'll just take this. Worst price would have been 3.96, so not too different. Okay, so now let's go to lunar. Open. Oh, 1 day. Wow. So does it say what it did in the day? In percent? I don't know. All I know is it opened here, 40.91. And then it closed Wow, so $5, that's 8, that's oh my gosh, that's 12.5% it went up today. That's crazy. So when was this? 9:36. So that would have been the worst time to buy in the first half hour. Yeah, definitely. So 9:36, the high is 44.55. Whoa. Lunar was 39.1 yesterday, was the worst price I would have bought it at. So that's going crazy. Okay, let's get the final long. We have ASST. One day. The open. Open 17.2. Okay, buy price would have been the worst in the first half hour, which was this. The high was 17.31. Oh, my education. Are you still in CO? Oh, college. No, I graduated college 5 years ago now. Over 5 years ago. Oh my gosh. Half a decade ago. No, I work in physics. I'm a laser engineer in a physics research lab, which means I make no money, but I do really interesting stuff. So that's why I need to make money from the stock market. But the skills really apply because this project is basically just doing research on the stock market, right? Analyzing, automating, setting things up, making it better. So what was the open? So SanDisk we're shorting. So the open was 1593.96. I think they need to do a stock split. So the worst price in the first half hour would have been the high here, 1626.06. Alright, so we got the data. Let's make sure that it... So yesterday when I pulled the data, it wasn't refreshed. So let's make sure it goes up to... What is today's day? We want it to go up to the 28th. df is equal to pd.read csv. So I'm in data retrieval. So I need to go // data / all ohlcv feather. Oh, don't read CSV, read feather. What does that symbol mean? Chinese? You speak Chinese? Alright, so if we do df dot... Oh, good, there's the 28th. Okay, so the data's good. That's all we need to do actually for that. So I can run today's picks now. Okay, so what are we looking at here? Skills. The open. Let's do one day. The open was 9.02. Worst. So we want to short this. Oh, I did the wrong thing for SanDisk. I forgot that's a short. So we want the worst position in the first half hour. So here it would be 8.74. Now if we go back to SanDisk, the worst position in the first half hour would have been here. So the low, 1560.48. Okay, now HCAI. we're shorting, so let's get the 9 a.m. Market open. So we'll say this was it. Open 8.87. Worst price in the first half hour would have been this. 8.7. And then ACAN one day, the open 20.45. But the worst place in the first half hour $932, $952, $953, $950. Oh, so it would have been this 20.17. All right, number of shares. All right, so this is in the PowerPoint. So, all right, so we have 336. For HTCO, we have 560 for bird. We have 80 for lunar, 80. We have 90 for ASST 90. We have 3 shorts on SanDisk. We have 158 shorts on skills, 62 shorts on HCAI, and then 22 shorts on ACAN. Okay, now we need the current prices. So I forgot I need those. So let's do df is equal to df where df dot date, lowercase, is equal to today, 2026-0528. I'm studying a bachelor's in computer science. Any helpful advice for me? Also, in next year, I'm going for a major. What do you want me to choose in major? Just asking. I would say physics, of course. Physics. I mean, if you want me to pontificate on physics as a major, I think it's the best because it's basically you learn how to be a generalist engineer. You learn coding. You build a computer from scratch. Not a complex computer like computer science people do, but you program in assembly language. You program microcontrollers. You learn how electronics work. You learn the physics equations for everything in the world. But I don't know. It kind of fits my personality, so I don't know what you like. Do you realize they say that now computer science is the most unemployed major, and it recently beat out physics as the most unemployed major, so I don't know. What's a good major? Whatever you're interested in. Really what matters is that you 2026-0528. What really matters is just that you stay industrious. Life should be interesting. Is where df.date is equal to that. But it says that date's not in there. 2026. Oh, good. That's what I'll do. is equal to df.date.max. No, yeah, but why would you choose computer science? What do you like about computer science? Computer science is cool. I mean, it's if I were to name the things I like, the majors I like, it's computer science, physics, math. Engineering is it helps you get a job. If you just want a job, you should major in mechanical engineering or even better electrical engineering. Oh, that's the perfect thing for you. No, I love physics. Physics is the best. I don't know. Did I make it seem bad? I think it's the best. So let's do that now. Wait, isn't it? What? Or don't I have personal issues with physics, you're saying? No, I don't think so. Okay, so we have HTCO. We have Bird. Oh, that's what I was going to say. If I could do college again, I always think I might do ECE, electrical and computer engineering, because that's kind of like, it ties everything together. It's kind of like physics in that way. Because the problem I always had with computer science is you don't, I mean, maybe I'm wrong, but my impression is that you don't really, you're not on the hardware side of things. So you can theoretically build a computer from scratch, but you do think computer science majors, you guys like build like operating systems from scratch and stuff, right? Which is really cool, but I want to know how the underlying chips work, you know? SNDK. Skills. And then we have HCAI. And then we have ACAN. So for sim in symbols, open is equal to df, where df dot account symbol is equal to sim. Okay, so it's that. We'll just call this sim df, and then we'll say close equals sim df dot close dot values of 0, and then we'll say print sim close. Okay, let's put those in. So this guy HTCO closed at 3.15. Bird closed at 4.27. Lunar closed at 45.7. ASST closed at 17.8. Whoa, it was a good day, I guess, for the longs. SNDK closed at 1641.64. Why is that updating? Oh, it's sum of J to J. Okay, then skills closed at 8.88. HCAI closed at 8.83. The ACAN closed at 21.91. Okay, so let's update these current prices. I want to go for a big data thing. Is that good for industrial or finance sectors? And also, what's your thought on blockchain technology? Blockchain's the coolest. I mean, what could be cooler than blockchain? I love blockchain. Um, I don't know enough about the computer science world. I like to code for fun. Um, actually working as a software engineer is not something I would want to do. I don't like working on the computer all day. I get carpal tunnel syndrome in my fingers. My fingers start hurting and aching. I spend so much of my life on the computer. But with my current job, it's cool because I'm working with my hands. It's physical. Um, so tough day for the shorts. Anyway, okay, let me wait. Now I'm at minus 840. Well, let's see if our positions from the previous days improved. So let's get all of them. So we have Bird. We have HTCO. We also want PBM. We also want BNAI. Do we have? No. We also want BNAI, HTCO. We have HCAI. We have ACAN. We have AXT. We don't have. BBGI. We don't have. Okay, PBM, Bird, BNAI, Lunar, SanDisk, Skills, HCAI, ACAN. Okay, so this is all of them. Okay, so PBM today closed at 4.37. Good, so that went up a little bit. Bird closed at 4.27. Good. BNAI closed at 15.78. HTCO closed at 3.15. Okay, now, I'm getting killed on that HTCO. HCAI 8.83. Oh, so it went up. My profit went down. Then we have ACAN. Closed at 21.91. We have AXT. Closed at 115.7. Good, so profit went up there. And then we have BBGI. BBGI closed at 15.86. Okay, now PBM, same thing, 4.37. We have Bird is now 4.27. Hey, pretty good. We have BNAI is at 15.78. Another increase. We have Lunar is at 45.7. That position did quite well. Oh, wow. Skills. Oh, no. SanDisk. 1641.64, so this would have done worse. Skills 8.88. HCAI 8.83. And then ACAN 21.91. Wow, so we went from down money yesterday to today we're at 264.61. Wow. $264.61. So now we should go positive. Very good. So now let's put these guys in, and all we have to do is change the number of shares. All right, so if target's 25%, let's just put the whole thing in. So at 25%, here we go. Now that's unscaled. This is 25, so let's get the target shares for each. 230, 384, 55, 61, minus 2, 108, 108, 42, 15. Okay, then let's update these current prices. So we have PBM, Bird, BNAI, HTCO. PBM, Bird, BNAI, HTCO. I just want to make sure the order of all these is the same so I don't fuck up the prices. This is the order. PBM, Bird, BNAI, HTCO, HCAI, ACAN, AXD, BBGI. Then yesterday, PBM, Bird, BNAI, Lunar, SanDisk, Skills, HCAI, ACAN. Good. And then from yesterday, HTCO, Bird, Lunar, ASST, SanDisk, Skills, HCAI, ACAN. Good. So we can just paste that right in. We'll just paste in the these guys. Current price column we'll paste in. Now this guy's at 236.1. Terrific. 236.1. And what's unscaled at? 264.61. Okay. 236.1. $528. Now we're up 0.2% there. Yeah, cool. All right, now if target volatility is 10%, we take the unscaled data, copy, put it into here. And then we have to update the positions. Alright, so for 10% volatility target, the positions are 92, 153, 22, 24, 0. Now that one's 0, but we're allocating $1,506. So let's pull up Python. So if it's 1506.718047 divided by whew. 1560, so roughly 1600. So we're going to say 0.94 shares for this guy. So 24, 0.94, 43, 17, 6. And then finally, let's just paste in the new prices for today. So now it's flipped. Now the riskier strategies have gone up and 10% volatility target is down. So now the returns are 19.39. Oh, minus 19, right? Yeah, minus 19.39. Fill these guys down. Okay, so the data's good. Yeah, we're ready to run the script. Let's look at the results. So if we go to Explorers, now let's go Python 3. Paper training models. And let's see how the new results look. And what is this? Scripts. Live strat. Very cool. Oh, I want these in there though. All right, let's put those guys, the labels there. What? All right, so we're going to start with 10% target volatility. That's that guy. And let's run it. What is taking that so long to plot? Oh, shit. Huh. Oh. That's why it was taking so long. Oh, I didn't save it. All right. So, something interesting happened. Okay, here's the positions. Let's set this guy to 0.25. Make sure it's saved. Let's run that again. Ba-da-da-da. Ba-da-da-da-da. Now all we have to do here is turn off dynamic scaling. And let's put this guy in. Okay, so we've updated everything. We have positions for tomorrow. Let's just look at that, see, is this interesting? So now it says biggest position should be on bird, ASST, lunar, PPTA. What is that? I haven't even seen that. So the only new one's PPTA. Let's see what that is. All right, so basically I've updated the results. We went positive on the volatile strategy, slightly negative on the conservative strategy. Um, but these results are looking pretty good. I updated the model for with tomorrow's predictions, so I'll post these on my channel. But that's it for tonight. Thanks for watching. Hope you have a good rest of your day. Don't forget to subscribe. Don't forget to check out the GitHub. Also join the Discord. Adios. Have a good day.